Okay, good afternoon, everyone, and welcome to our webinar, Smart Investments in Banking Auditing for Financial Success. Community associations today are managing more money, more complexity, and more risk than ever before. Insurance costs are rising, reserve requirements are under greater scrutiny, fraud risks are increasing nationwide, and boards are being asked to make financial decisions that can actually impact your associations for years to come, including your property values. So with that, I'd like to ask a key question. If you hired an independent expert to review your financial controls, how confident would you be in your financial reporting today? I'm your host this afternoon, everyone. I'm Zuli Marabona with KW Property Management and Consulting, Executive Vice President. And I'd like to turn it over to our panelists this afternoon for a quick introduction, and then we'll get our session started. We have this afternoon Suzelle Bro with KWPMC, as well as Miriam Velasco and Monty Kane. Suzelle, would you like a quick intro?
Sure. Good afternoon, everyone. It's exciting to be here with all of you today. Very important topic that we're going to be covering. Like Zuli said, my name is Suzelle Bro. I'm with KWPMC. I've been with the company now about 2 years. I'm the CFO and I oversee financial services, so all the back-end reporting, AP, AR banking, and the fin reporting component, as well as corporate KW.
Thank you so much. And Miriam?
Hi, my name is Miriam Velasco. I'm the lead regional controller for KWPMC. I oversee the regions in Hollandale, Aventura, Southwest Florida, and the Orlando markets.
Monty, last but not least.
Thank you so much. I'm Monty Kane. I am a certified public accountant, and I've specialized in this industry for many, many years. My origins go back to when I was appointed to a task force by the American Institute of CPAs to come up with the accounting principles for the industry and the audit guidance. And we came together with a publication, and now it's been adopted by the Financial Accounting Standards Board in terms of how it's accounted for. I take pride in some of the effort. By the way, I do spend time with the Florida Institute of CPAs on the condominium committee. I've helped the Bureau of Condominiums enact new legislation that's protective in the financial area from time to time, and some of the wording is exactly as I wrote it many years ago. I do enjoy this practice. It's really a difficult practice because right now we're in a situation of turmoil, which we'll talk about those things. I'll be here to answer your questions. On a personal note, I'm a big gym rat. I'm in the gym 6 to 7 days a week. I run many
Love hearing
marathons
that.
and marathons and half marathons. And also I volunteer with the National Alliance of Mental Illness. I run the Miami-Dade County Family Support Groups every Tuesday night on Zoom. And so I really enjoy doing that. So thank you for having me.
That's wonderful to hear, Monty. That all that means is that it keeps you with great energy, right? To keep going and keep fighting the cause.
You got it. Yeah.
That's right. Well, before we dive in, I want to just go over a few housekeeping sessions or items, I should say, for this session. First and foremost, thank you for joining us this afternoon. This session will last approximately an hour. We thank all of you that have participated and have actually submitted questions in advance. We're going to do our very best to answer those questions. We do want to preface by saying that none of us are interpreting law. We are going to do our very best to give you the best answers possible, but we do not represent your association specifically when we're providing these answers. So always refer back to your association, either CPAs or attorneys, for specific responses. And last but not least, we are going to provide the Q&A chat area, which will be open and live throughout the session so that you can be interactive. We want to make this an interactive session, so please feel free to submit questions throughout the chat or throughout the session. And with that, we do have a poll question we're going to start with. So let's go ahead and bring that poll question up. We ask all of you to take a second to answer. And the question is, how frequently do you discuss your association's fund balance? Every month? Every year? never, or you have no clue what we're talking about. And that's okay too, because we will go over that in just a few seconds. We'll give you just a minute to answer. Okay, I don't know. I think we're good. All right. So I think we can all see that here. I think from our responses, 16 of you said you review this every month. 3 responded once a year. The good news is none of you said never, and there was at least one of you that is not quite sure. So we'll go over that. But in order to start the session, I'd like to go ahead and kick us off with a question, and it's just a foundational question. And Monty, I'll start with you. From your perspective, what are the most common financial risks associations face today? And maybe just that boards may not even realize.
Well, that particular one, in terms of the sufficiency of the fund balance, is probably one of the most significant things. That's when I look at a financial statement, I can in no time at all determine whether it's financially healthy or it's not, and maybe what I call a sick baby and needs a lot of assistance going forward. The fund balance is the excess of your assets over your liabilities, and you always want that fund balance to be the equivalent of 1 to 2 months of annual assessments. The reason why you do that is because you have to pay your bills even before you collect the assessments from owners. So you always have to have that. And also, if you happen to have some unexpected amount charges there, or you haven't increased your budget, you can quickly go into a deficit position. Other areas that we see that are issues are improper revenue recognition. And that's where, and you may say, well, why is that important? Well, because the revenue recognition is an issue to make sure that you are recognizing the revenue on a monthly basis, whether it's collected or not. You also are recognizing the revenues for the reserve assessments, not necessarily in the income statement, the statement of revenues and expenses. That's important too. Another area are accruals. So accruals are setting up at the end of each month, at the end of each year, and each quarter, the liabilities for all of the unpaid bills. And it's a cutoff. It's virtually a cutoff. And if the invoices haven't been rendered on a timely basis to the management company, then that's a problem. And so hopefully all of the vendors are submitting their invoices timely, and also that they are reviewed and approved. And then the other issue that comes to mind is the classification between reserve, operating reserve, and special assessment expenditures. That comes up quite frequently.
Great, thank you. Still anything you'd like to add to that?
Yeah, no, I agree with Monty. I think, as a management company, we always say, the fiduciary duty lies on the boards, but really as a management company, we are the ones that are running the operational and again, financial stewardship. So we really partner closely and really work, again, with the boards on, like Monty was saying, like educating them and making sure that on a monthly cadence, we really are highlighting that to our boards and ensuring that there is a review process in place, because it is very important to kind of do that analytics. And it was great to see the poll response that people are doing it monthly, right? That's really refreshing to see that, because that really is the goal, right? And like that's great practice to do that.
Great. Oh,
You operate already, and so and you're educating them.
Yeah.
wonderful. Thank you. So what do we say about just reserve? So we have a great question here from one of our board in Fort Myers. Thank you so much for submitting that question. How do we increase reserves with investments for our HOA? The question is, last year it took 5 months to create a new workbook for our 2026 budget. Let me know if you understand the question. If not, I can try to rephrase it. Maybe Suzelle, is that how to increase reserves with investments for HOA? So I think it's how to invest our funds correctly, right? So if they have HOA reserves, how do we increase our investments, right, for
Yeah.
our association?
I
Yeah,
can
so,
take that. Oh,
oh, go ahead, Miriam,
sorry.
you can take that.
So the best and most secure way that we have currently for reserves to be invested is through our banking partners and our Cedars program. There is also very low risk T-bills that can be invested by the associations, but that the key here is to maintain all of our investments very, very low risk and with as much FDIC insurance as possible.
Okay, now if I was an association, right, and what's the best approach that they can take, right? They can speak to their financial advisor, they can speak to their management company. Should they be working with a CPA? What is the best next step?
The first step is to speak with their management company so they understand their immediate needs versus their long-term needs. What money or cash availability are you going to need for the next 365 days against what you are going to need longer than 1 year? Once that has been allocated, then we can advise and send you either with our, if you're with KW, with our own banking department, or if you're not, with your own financial advisor, as to what the best plan is so that we can ladder your investments based on your needs.
Thank you, Miriam. Okay, so the next question that I have received is more on the audits. So we're right in the middle of audit season, right? So what really would be like the top 5 tips to be prepared for the yearly audit from an association perspective, right? We obviously see this all the time where associations may or may not be prepared for their yearly audit. So what would help? Um, both on the accounting side and on the CPA side to have a smooth audit every year.
So let me just go back to the prior question first as far as investments. So I think it's worthy of noting that both chapters 718 and 720 have no explicit guidance about investing reserve funds. There's no guidance in the statutes.
Great point.
But 718.111 specifies that board members have a fiduciary duty to the unit owner. So that really is at the big picture. And that, to me, pointing that out regularly to the board members may assist them in doing a better job because they're representing other people's money. So I just wanted to mention that. As far as the audit is concerned, I know that you guys prepare very well in advance for the audit there, but for those that do not use KW, it's really important that you're monitoring the monthly and quarterly P&Ls of your association so you can look at what's happening in trends, and that you're also monitoring the balance sheets. The balance sheets, knowing that the assets are properly stated and the liabilities are all there, really form the basis of making sure that your profit and loss statement is accurate. So if you don't have a proper beginning balance sheet and a proper ending balance sheet, then your statement of revenues and expenses is going to be off. So that's the key thing, is to make sure that all, particularly that the liabilities are all on the books. And also perhaps take a look, when you're doing the budget for the following year, take a look at what's going on this year and what needs to be done to make sure you have a proper closing. When we're auditing the associations, we get in there and we do that in September or October. We do the preliminary work. We can really get to see what's happened for the first 8 or 9 months of the year. And also that will help us inform you, the boards, and you, the management company, of things that may need to be addressed. So that's important, just to look forward and also identify issues that are unknown, like what's happening with these lawsuits, when will we have to pay out on those things, the unknowns, what's happening with the with the special assessment projects, I should say projects, because I don't think anyone just has one project, right? There's always
Right. Oh,
multiple,
no,
one on
that
top
doesn't
of
exist
another, another.
anymore.
And also monitoring the financing, the collection from the owners who elected to pay over time and monitoring that because that's a tricky and a hard accounting. And if we don't get that right, we're not getting the financial statements right.
Right.
I agree. I think, I'll add a little bit to that where what we have found that has been, again, just standard practice for us, but super useful in the audits is having those supporting schedules, right? The balance sheet reconciliations. And to your point, Monty, you kind of have that detailed, right? Very well packaged and structured on every balance sheet item that's critical to the audit. I think for us as well, like with our role of the controller, I think the other thing is also really working collaboratively, not just from an accounting perspective and debits and credits, it's with the on-site team, because they really are the ones that are managing those large projects. So again, making sure we're coding things correctly and putting them in the right funds, right? Special assessment fund, reserve fund expenses, operating fund expenses, that all is very critical, right? To ensure that you have sound financials, right? And everything's getting booked correctly. But that is a very collaborative effort with whoever's managing the on-site portion of the operations.
Suzelle, you bring up a good point, and it's ease of access, right, for information. So the on-site team plays a very critical role in the process, and it's also for the documentation that supports the decisions that are made for the association. So a little bit beyond the financial decisions, right? It's also the notices and minutes and agendas for some of those meetings that sometimes are backup, right, to the audits. And so, from a management perspective, for those associations out there, that's also important to make sure that you're documenting somewhere that whether it's your CPA or your management team or your accounting team, if they're the ones that are controlling the information that's going to and from the CPA firm, that it's easy to access, that it's being stored somewhere as part of your association records. So very important.
Yeah, to keep all that organized. And I think also we've seen in more recent years a technology component, right? So the ease of file transfers between the auditors and the association that also facilitates, right, just a more smooth and streamlined audit process.
Mhm.
The other thing we found is just giving view access to the auditors into your system, right? Whether it's
Great point.
QuickBooks, whether it's, Fanica, whatever system you're kind of transacting in, we also found that that's a big benefit, right? When the auditors just have access to go in there and pull their own support, that also facilitates a very streamlined audit season, I'd
Helps
say.
speed up the process as well.
Yes. Yep.
So there are different criterias for associations, right? Whether you're having a review, compilation, or an audit. So can we walk through how do I know if I'm a small condo, what do I qualify for, and whether or not a vote of my membership is needed? And so I know we know the answer to that, but there are some associations that really genuinely are confused by that. And since the statute does change often, it would be good to clarify that criteria. I don't know, Monty, or
Say,
if you'd like to take that on.
Yeah, either way, I mean, basically associations that have $500,000 in revenues or more must undergo audits. Uh, and that's a full financial statement audit. And sometimes their budget may be $400,000, but they may have a special assessment. And that special assessment brings them over the $500,000, and they have to have an audit maybe for the first time. And that's a problem because when you have to go from annual reviews and now you go to an audit, you also have to audit the opening balance sheet. So not just the ending balance sheet that you're doing this review for, but the opening one, which was not audited before, which means a lot of extra work. But generally, most of the ones that we deal with are audits, associations, and that's a process that's done under generally accepted auditing standards, and there's procedures that are conducted in terms of how that's done. A lot of communication that we have with the board of directors. So yes, the management company has a major role in providing stewardship, as you said before, for the accounting, but that doesn't take anything off the responsibility of the board of directors. They are the primary responsibility. So I always say you can't blame the management company if they're doing their job under their contract if you haven't seen yourself what's going on here. And you can't just accept, oh, I just relied on the management company. Yes, they tend to do that. They probably with you guys, and they probably tend to say, hey, if Monty and his firm are doing the audits, we have nothing to worry about. But that's not good enough for me because it's really important they know what the process is of an audit.
Great, thank you.
It's a process because they're involved. The board of directors is involved with us in the audit. It's also the limitations of an audit. An audit is not 100% examination of all the transactions. It's not 100% examination of all the expenses. And we try to make assessments in terms of the more vulnerable ones, the ones that are more susceptible to fraud. So we can maybe do some extra procedures in an audit of a financial statement. It's not a fraud audit. That's another type of audit we can talk about. It's basically procedures just to identify signs of those things. And if we do, then we will discuss further procedures to delve into that.
Okay, we have some questions on smart investing for condos and HOAs. And so before we move on, though, I wanted just to clarify, is there anything that we want to add that would be from what the topic we've been on that's slightly different for HOAs, or we feel that it's equally as relevant for HOAs as it is for condos and what we've talked about now with the audits and the criteria?
So from my perspective, HOAs are much easier audits because basically they're not dealing with the same type of common elements and all of the extra expenses of insurance for the property. They may have properties such as recreational buildings and the gatehouse and things like that. But generally speaking, everyone in an HOA will have their own insurance, except for this. Some of the structures may be different in townhouse communities. But I find them to be much easier audits. But still, I've seen so many boards not follow the trends and not see what the cutoffs are, particularly when you have things like landscaping expenses that are done just maybe every other year, such as tree trimming and things like that. Not really addressing all of those things. There could be many issues in the HOA. It all depends on the HOA, but generally speaking, condominiums have much higher budgets per unit because of all of the interior and amenities and staffing that takes place.
Right, right. Although nowadays, right, we're seeing much larger homeowners associations with lots of amenities, food and beverage, right? So those are no longer the exception from what we're seeing.
Especially for those who are going through modifications and reconstruction of their clubhouses,
right,
recreational facilities, and all the special assessments that go along with that.
Exactly.
Every HOA wants to keep up with the new ones. That's what I see out there.
Which leads us to investing your funds again. So we may have covered a little bit of that through Miriam's response, but let's understand, the concept under or behind smart investing. And the question really is around sharing tips, if we have any that we can share right now, on identifying potential investment opportunities, and explaining the difference between long-term and short-term investment strategies for an association. Does anyone want to take that one?
I can talk about it. So the first goal and step is to really understand what the association needs. You're going to be using, if you're talking about investing reserve funds, you're really going to use your reserve advisors to be able to map out what is going to be your needs within the next, like I said before, the next 365 days and then beyond 365 days. That really needs to guide your investment strategy. Once you have that information, you can really take the funds that you have, and the state statute does allow you to commingle your SERS and non-SERS reserves for investment purposes, and you go out to market. There are short-term 90-day, 180-day, 360-day CEDARS investments, which we're paying much higher interest rates than they are right now. And as we see a decline in interest rates, you will see those bank rates start to decline as well. There has also been a decline in treasury rates. Those are really the two safest options for any condominium and homeowners associations to invest in. But it really is about the strategy more than the vehicle for the investment. to make sure your investments are, your cash is always invested in some sort of vehicle to the maximum that you can look for over time. For example, if you know that your boiler is expected to be replaced in 2027, then a 5-year treasury is not going to be your best option. Those kind of thoughts have to be taken into account when you're looking at that. So it may be that you do a 6-month CDARS and take the lower investment rate because you need the liquidity after the end of 2026. But liquidity really will guide all of the investment strategies going forward.
So Miriam, to your point, right, if I'm in association, and I think Monty, you've alluded a little bit to, because it's our reality today, right? Many of our associations are either involved in special assessment and or capital projects or both, right, or a line of credit. And so, and some of those or all of those may involve the use of their reserve funding in some capacity. And so on one end, they definitely want to invest long-term their funds, right? So they want their reserve funds to keep growing. But to your point, Miriam, you also want to make sure that there's that liquidity for their reserve fund so that they can utilize that, right, for the expenses that are coming up. So what you're saying is that there are different options. The best approach is that's where the short term and maybe the long term approach comes in for the investment strategy for the association. Have enough funds liquid to be able to utilize them for the expenses that are upcoming. But then you can also have a longer term approach where your funds that can be invested on a longer term.
The key is to ladder. That's the terminology. The
It's
key is to ladder to make sure that you have a little bit available now, a little bit available in 6 months, and what you need going forward. So it's important to use your reserve study, use your advisors, and make sure that you know what is a short-term project and what is more of a long-term project. Because you don't want to have to pay a penalty if you need to take that money out earlier than you thought.
Okay, perfect. Okay. I'd like to jump in to banking, and we do have a question. I'll start off with this question, and then we can lead into some other questions that we had received before. But this question is coming from someone online. Online banking is becoming very prevalent for obvious reasons. What are your thoughts in investing and banking online in contrast to personal banking?
I mean, I can answer that in the
Sure.
sense of, I think there's a component of online banking in every type of banking. I think the best strategy is maybe to use a combination of both, where you have some sort of personal relationship with an online component. And I think most banks offer that at this point.
Okay, great. Thank you. Now, prior questions that we had received, and again, thank you so much for all of the questions that have come in. Choosing the right banking products for our associations is definitely very important, right? And a focus. So can we discuss the importance of selecting banking products that meet the specific needs of our condos and HOA communities? So how do we best package that, right? And what would be our recommendations? And I think Suzelle or Miriam, I would go to you first for that question.
Yeah, I think for us, again, our situations, we do have, call it 6 partner banks that we work very closely to. So when we're onboarding an association, we like to present right to the boards all the different options and really gain a true understanding of what's really important for them, right? We also do volume metrics to understand, are you processing most of your payments through check? Are your vendors opposed to, getting onboarded with a selected payment method, right? So I think it's like that discovery phase is really important, and then understanding the needs of the specific association. But again, the presentation of the different rate structures, the different facilities that each of the partner banks offer us. We also have grown into additional products. We have a product now called Common Area. Again, I don't know if other management companies are doing that, but because we see, again, that requirement and a little bit more financial acumen of our board members more recently, they really are asking for that level of service, right? So now what we do is that we kind of put it out in a platform where a lot of several, not just limited to our 6 partner banks, have the opportunity to come back with very competitive rates and products. And again, it's just that true collaboration with the board and the associations with the management company to really understand what is that financial objective.
And from an audit perspective, we like to see where there's a documented investment strategy that's documented, so that that's going to be open for all the owners to see that you have a policy in place and what that policy is and how it's working from time to time. Because when things go wrong, then it's a problem. So hopefully things don't go wrong too often.
Great. Yeah, I that's going to be one of my questions is typically when you go into an audit for an association, what are maybe one or two or top three things that you look at and make you question, right? Make you want to dig in further because it's important for associations. Some of them don't know what they don't know, and it's important for them to understand the potential for exposure. So that's a little bit of what I want to accomplish today. So, leading into the financial management piece for our associations is maybe a little bit more on the strategy for effective financial management, high level on our budgeting process, expense tracking, and then the reserve fund planning as well. It's just our approach towards that. And then Monty, just best practices if you could add at the end. So
So I'll
Suzelle,
take
Miriam. Okay, Miriam. No, go ahead. Perfect.
I'll take the best practices in terms of um, KWPMC's strategy. So we make sure that all of our associations expenses go through a board of director approval process so that there is that transparency between the invoices that are coming in and the coding and placement on the income statement. So that process is very transparent. It's openly available to all the board members, and they would actually see where their expenses are going. When it comes to budgeting, we like to use the last 2 or 3 years of actual expenses against our GL so that we can say, this is what has happened in the past, and how do we make sure that we don't have any budget shortfalls in the future. History is our best guide to future expenses. If for the past 3 years you've had gone over budget in your plumbing expenses, then guess what? There's an issue with your budget and plumbing expenses. It's no longer a one-time thing. It's historically you've spent more on plumbing expenses. So I think that is the way that we try to present and look at things for future years. When it comes to reserves, your reserve study is your Bible. It really is your contract between the board of directors and the ownership saying, this is what we're saving for. This is when we think it's going to mature or end its useful life. And this is our plan. This is how we're saving for this plan. A plan is great if things happen. So you also need to have the flexibility and liquidity, as we have spoken about so much before, to have the resources available if something does not meet its expected lifespan, and that component needs to be replaced earlier. And the same with if a component exceeds its useful life, you keep reserving for that, even though you haven't it's exceeding its useful life. So that is the strategy that we take at KWPMC.
Wonderful. So what would you say is the best approach on a way that an association can protect whether they're operating versus their reserve funds?
I would say to make sure all your funds have an ICF component so that anything above $250,000 is still FDIC insured. So that kind of banking component is highly important.
Okay, and then I'll go back to you, Monty, because I realized that I said any best practices you wanted to add and I skipped you. So I'll go back to you on the last question.
Thanks for asking that because I look back at some failures over the past many years, and sometimes, so I suggest that that a board not just say, oh, there's a go-to person who handles everything and does all the approvals for this because they're accountant, they're a CPA, and they were treasurer or this and that. No, I think that there should be a budget and finance committee that meets regularly and they assess it. So there's dialogue going on where they can meet and also approve the financial statements and also address what's in the future. So that's important because I've seen too many frauds occur where one check signer says, well, if Monty signed the first check, I don't even need to look at the invoice because I know that he looks at things closely. And it's a different name. It's not my name that they use, of course. But the fact is that you can't rely on someone else. You have to take responsibility. A full committee has to take responsibility. And then the other thing is that when it comes to reserves and it comes to special projects and all those things that go along with that, updates done on the reserve study have schedules done on the progress on the projects that are going on so that you are right on top of that. And I know you guys do that because I've seen many of your reports right on top of that so that there's no surprises because what we know causes dissension is when there's an assessment increase, whether it's operating assessments or whether it's another round of special assessments. And also the other thing is the use of the word contingency. That's another area. So you throw contingency into a budget and it gets exploited. So not too much, we don't have enough time to talk about what happens with that contingency component. I'm not a believer in contingency components. I think you specify each item there. Maybe if you want to have a 2 or 3 or 5% amount in there for your special assessment projects, just for room there, but not to use unless you really have to use it.
And if I can add a little topic
Sure,
on
absolutely.
contingency. As a personal practice, I never like to code anything to contingency. To move the money to the correct expense and code it to the correct expense because historically, if you just dump everything in contingency and you're trying to go back and budget the next year, then you don't have any good data.
And Mary, on that point, so that's a sore point for me too. When we pick up a new client and I see in prior audit financial statements, contingency expense as an expense line item, no, you can use it in a budget, but every single expense has a category in the budget.
Exactly.
So don't put something in there because there better be a big footnote on that financial statement that says, okay, in contingency expense, it's a resolution of a lawsuit expense and whatever it is. But yeah, I can't stand that word contingency. And I
understand why it's budgeted that way, but I couldn't agree with you more, Monty.
How about, so along those lines, because that was one of the questions that I definitely wanted to ask was when you're in the audit process, Monty, what are other things that stand out to you that you wish associations wouldn't do, right? Like just best practices of stay away from these practices and it would help your audit process.
Well, first of all, we make assessments of the entire system in every audit. So we make assessments of what goes through the management company as well. So that's part of it. We address the issues with the board of directors at the beginning of every audit. No board of directors should ever let the audit start without having a meeting or conference call, a Zoom call with the auditors, because the auditors have questions to ask. They're going to ask about what you may know about any fraud going on. Most frauds are there, people already know about it. And so the board of directors are the best people to talk to us. We have other questions to ask about what happened during the year. So it's a tricky area because each association stands on its own, and really the quality of the reports that you guys provide is very important to us. But it's not something we can solely rely upon. We have to test those procedures.
Okay, great.
And I will say this, I'm spending more of my time now, not through the audit firm that I'm director of, Sokol & Sokol, but more of my time now with Fisc Advisory. And we are doing so many forensic audits because things went wrong, or they think things went wrong and they need to find out.
You need to look further, right?
Yeah.
So one of the questions that came in previously was what fraud protection should every association have in place?
So I would say this. I've been saying this for years. I don't know if people follow it, but you need to have a fraud hotline play prominently placed or either on the website or it used to be in the mailroom, but there's a fraud hotline. You can anonymously send to that fraud, and then it will get to the appropriate representative at the board level or maybe the management company. It really helps, and it's a very nominal cost per year. That would be that, and then make sure the controls are in place. So I would hope that that the controls are documented there and that they're adhered to.
Right.
Yeah, I
Suzelle,
was
I
just
think
gonna
from
add to
a,
that. Yeah, I
right,
was just
from an
gonna add to
internal
that
control
too.
perspective, right?
Right. That's a great segue because I've been trying to but yeah, I think for us too, as as a management company, it's really critical to ensure that we have, the controls in place, internal controls, segregation of duty, right? So as we're thinking through again when we onboard, that just come like our standard practice, right? And even like what Miriam was saying, even to have board approvals, right? Our workflows within the expenses are critical. And then just controls not only from a back office perspective, but also on site, right? And to your point, Monty, having that well documented. And for those associations that come on board that potentially may not have it, we make sure that that is standard practice for us.
Okay.
Thumbs up.
Go ahead, Monty.
No, I just thumbs up. That's what I like to hear. And we know how you work, and I can say that it helps us get through that audit process from start to finish a lot better when you have those type of controls in place and the document and stuff, and the fact that you've addressed it in the management reports and they're all documented because documentation of all this that's there has the history and that's important. That way, if something goes wrong, it was either unforeseen or it was anticipated, and we caused less issues at the at board meetings. Wouldn't that be a nice thing to have less issues at board meetings?
Yes.
So, and even as you mentioned earlier,
Absolutely.
if there's a gap in an investment policy, right? I think we really try to partner, right, with those boards and give them the recommendation when we identify, right? Maybe you don't have an investment policy. You should have an investment policy. So we really work closely with them to ensuring, again, some of those critical items are in place.
Right. Great point, Suzelle. So I have a quick question here, and then I'm going to jump into financial reporting briefly. Because time is flying by. Great topic. That's what happens when we have a great topic. So the question is, do you recommend pooling or line by line reserve, including line items like pool, laundry, plumbing, etc.? What is our recommendation? Any volunteers?
As with most questions that are that highly specific, I would generally say it depends. It depends on the age of your building, how much actual cash is in your reserves. And it's not a decision that should be taken lightly. Obviously, if you have line item reserves now, those line item components must remain. You can pool for the future, but those line items, until you use the funds in those line items, must remain. So I would generally say best practice is to work with your reserve advisors. Look at your components, see what you have in terms of cash and in terms of needs, and then really decide on what's best for your personal association and your association's personal finances or corporate finances, I guess is a better word for
Thank you,
it.
Miriam. Let me ask a related question, follow-up question. Would we say from our experience that there are more associations with pooled reserves today versus line item reserves? Yes?
Yes.
Okay.
It does offer more flexibility and it lets you be more dynamic in the terms of if a component exceeds its useful life or if a component does not meet its useful life. Let's say your reserve study says that your cooling tower is going to last you 10 years. But guess what? You're on the ocean and the salt water has been really tearing apart the metal in your cooling tower and it only lasted 7 years. Then you have the flexibility to know I already have the money to replace the cooling tower. I can go ahead and do that for my association.
Great. Thank you for that. So now on to financial reporting. So for all of our associations out there, regardless of your size, you're receiving or should be receiving financial reporting, right? So it's a very important report for your association. So what are the top 4 or 5 things that every association should understand when they're reading very critical information, when they read their financial reports? Because many of us don't understand them.
So I would say on your balance sheet, you need to understand what your cash is. How much money do you have in the bank? And then how much money do people owe you? And how much money do you owe? And that ultimately is boiled down into our fund balance, as we spoke about at the beginning. On your income statement, you need to see how much am I taking in and how much am I spending? Am I spending more than I'm taking in? Is this going to continue? Or is this something that I can pare down and get back into living within the means of the association? I think those are the two biggest components that you can look at in 30 seconds and see if obviously if you have the knowledge or if someone explains it to you. But it should be your first look when you receive a set of financials.
Anything else we want to add?
I would just add that also for those associations that have financing activities, also understanding what's going through those financing activities, because that's built into the statement of cash flows. It's not in the statement of revenues expenses. It's not in the balance sheet. Yes, the balance that's owed, but things can go wrong there. But when it's set up at the beginning of a special assessment project, monitoring the financing activities, not just the insurance findings, but really the financing that is for the project. Many times, the condominiums are getting loans and they don't have to draw upon the whole amount because a lot of people have already paid in advance and save on the financing costs. But monitoring that is important. And also when there's payoffs, I know you guys account for it, right? Because I've seen it, where there's payoffs and they get applied and they get sent to the financial institution to pay down the loan. So as soon as a payoff comes in, you want to make sure that it goes, because otherwise it's costing more interest.
That's a great point. And I think on KWPMC's balance sheet, I always look at the ratio between what you have unbilled and what your loan balance is. And if your loan balance ever exceeds your unbilled, we know that there's a problem and we have to handle it differently.
Don't you just run that through AI and just throw that into an AI machine and the AI gives you all the results, right?
Yeah.
I wish. We're
Right,
not
and
there yet.
every association is different, right? I mean,
Yeah.
I'm joining everyone from Southwest Florida, and so we have lots of seasonality here. So that also it plays a role, right, in how we approach our budgeting and our financials. So and the same is true in other markets. So with that said, it's important that you work with your professionals, not just on the budgeting side, but also in understanding your financials and how you're going to invest, making sure you have the proper internal controls. All of that is extremely important.
Yeah, and I was just going to add to that, Zuli, that, what we've seen to be really successful is kind of like that deep review, right, with finance committees, right, with your treasurers on a monthly basis, right, and creating those net cash positions, the forecasting,
Absolutely.
going through the balance sheet, right, making sure that dialogue, so partnering with your management companies is also really critical to ensure that, again, you're having those discussions and you're bringing that kind of every month into the conversation as you review your monthly financials.
Okay, great. And that's an incredible point, Suzelle. There are other reports, though, that are important as well. Are there any reports that we would highlight or supplemental schedules, either from the actual financial reporting or reserves or investments that we feel are also important to understand and know on a monthly basis? If you're an association if you're a new treasurer for the first time looking at your reports, what else is important?
Yeah, I'll kind of turn that to Miriam. But I think it's like, to your point, it's beyond just your balance sheet and P&L, right? There's a lot of other supplemental schedules that are critical, right? That are important to really evaluate, to empower and give the information needed so that the boards can make those critical decisions, right? It's not just review a monthly report. They really have that fiduciary duty. But Miriam, I'll kind of let you take that and walk them through some of the reporting that, again, from our perspective, is just standard report with the monthly package.
So what I have found is most useful to either a new treasurer or an existing treasurer is the variance report, which gives you your expenses, what your budget was, and why those are not in line with each other, or why you've exceeded. Sometimes, hey, you had $100,000 in legal, but you didn't spend any money. Why is that? Is it coming up later? Is it something that we need to accrue for or reserve for? And also as Suzelle brought up, your net cash position, which really does tell you this is how much cash you have, but this is what is really already allocated. What we will need to be spending in the near future. And those documents really do influence decisions in the future. Because not only do you have to understand your financial position today, but you need to understand what your financial position will be in 30 days, in 60 days, in 6 months. That forward looking. And that is where a partnership with the on-site team really is invaluable because only they know what is happening. That the board members decided, hey, I think we want to redo our cabanas next year. I wouldn't have that information, but the on-site team would have that information. So we need to plan accordingly. And once I come back and meet with a board and say, hey, your on-site team told me that you're going to want to look at redoing your cabanas. This is what's in your reserve study for that cabana. This is when it was supposed to happen. And this is what you are looking like on a cash output basis. So those conversations are hugely important.
Great. Thank you, Miriam. So Monty, I have this last question for you, and then we're going to work on wrapping up this session. There's a question here to say, how can we manage shortfalls? Can we borrow from reserves? And of course.
I'm not an attorney.
Right.
I'm just a certified public accountant and a consultant. That's really prohibited from borrowing from reserves. As a matter of fact, the statutes say that you must fund reserves in the same frequency as assessments are to owners. And that lack of funding is a violation of the statutes. And sometimes it starts snowballing too. And what we don't want to see is the reserve fund having a receivable from the operating fund. That's a big no-no. So I don't think it can be done. I do know that attorneys have advised clients if it's on a short-term critical basis and the funds have to take place, just make sure it's funded immediately. But that's it. You have to go to the council and to the attorneys for your association before you do any of that.
Thank you. And again, it's a very specific question, so it's important that we understand that we can't advise you legally. Definitely should consult with your association attorney and work with your association board as well. But from a procedural perspective, thank you, Monty, for that response. So I'd like to give each of you a few minutes, right, to talk about just some takeaways, important things that you feel associations should know from your perspective. And I'll start with you, Suzelle.
Yeah, I think it's important to really, if I think of the audit process, our financial responsibility as a management company, I see it as it's a true partnership, right? We're really trying to work together with the boards. I think, Monty, like you said it earlier in the call, they really are the ones that have the ultimate fiduciary responsibility, right, to their associations. And we're partnering with you, right, to ensure that you have all the information, the transparency, we're following guidance, we're following statute to make you successful, right, and be able to do what's best for each of your associations. For us, it's about, again, transparency, ensuring that we really are in close collaboration, reviewing financials closely with you. Our structure is, Miriam is a controller. We really see it as a partnership and not just debits and credits. It's way beyond that, right? I think it's really enhancing that skill set And again, we're not financial advisors. That was the other thing. I think earlier as I cringe a little bit because we're not financial advisors. We just really try to partner with you, right? And give you recommendations of what we see, right? Within our entire portfolio, what's worked, what hasn't worked, and give you what those best practices are, right? And kind of our experience with attorneys and a lot of the different audit firms, right? So that's really, I would say, partnership to me is a critical takeaway of, what we're kind of seeing here to get through, again, sound financial investments as well as getting through an audit successfully.
Thank you, Suzelle. Monty?
Okay, I'll bring up a couple things that people don't want to hear about. That's income taxes. So basically, no one likes income taxes, but there may be taxation, and it's important for the treasurer, maybe the board to understand what is subject to income tax and try to collaborate with the management company and with us or your CPA for coming up with reasonable allocations against some of those taxable items. Number two, I would also say be cognizant of whether you have sales tax, state of Florida Department of Revenue sales tax obligations on the types of revenue that go through the association. And finally, I would say that another thing that's not thought about too much is the amount of funds that each owner pays over many years that go into capital improvements to your HOA or to a condominium. So there's a way to measure that and to calculate that and to track that so that when an owner sells their units, they will have a schedule that shows from the time that they bought to the time that they sold that how much of their maintenance fees went into capital improvements, capital replacement reserve, special projects, not deferred maintenance, but those types of things. Very important. If you have questions on that, I can certainly take them later on, but it's something that's missing out there. And finally, one other thing, and that's settlement income. So many types of different settlement income, either because the HOA has provided an easement to a utility company, or because there's been a neighboring condominium building that's had some construction debris that fell on your condominium, and you get a public adjuster, and all of a sudden you have $1 million or $2 million or more of income. There's taxation consequence to that can be reduced or eliminated by properly planning for that in advance. So anytime the settlement income, it could be a legal settlement or it could be a settlement, just a contractual settlement. Keep in mind the tax, there may be a tax consequence, but there are ways to avoid that.
Wonderful. Thank you for that, Monty.
And often knows with just one small thing, knowing and understanding what your fund balance is. That is highly critical, and with that understanding, you will have so much information at your fingertips.
Awesome. Thank you, Miriam. So you heard it from our experts. Understand your fund balance, the importance of partnership, transparency, having the proper internal controls is critical. And I would like to emphasize that as well. I think there's not one of us that's an expert in everything, and the key is to have the right team in place that knows who to call when you have a need. And from an internal control perspective, separation or segregation of duties, as you heard from Suzelle and Miriam and Monty, you definitely want to make sure that you're protected from fraud as best you can be. And if you have any questions or concerns, call the experts and have them take a look for you. And most important, as Monty mentioned, make sure you do your taxes and make sure you understand what the exposure is there from a sales tax perspective and more. I asked the question at the beginning of the session, how confident would you be if your finances were reviewed tomorrow, right? And so after listening to our session today, are there any steps that you and your association want to take to increase that confidence level? We hope you found the session this afternoon helpful. Please do not hesitate to reach out to us with any questions or if we can be of any service to you. And please join our monthly webinars. Next month, we will be talking a little bit more about insurance and hurricane preparedness. We appreciate you and thank you for your time this afternoon. Bye-bye, everyone.